Okay, so we're back again. 13th of April, Easter Monday. It's 1:07 p.m. We're doing our weekly call, weekly live call. I call it weekly live call with Jin. We have traders from all around the world. Scott, wave, give us a wave. Well, Scott, yeah, in Australia, we have Daniel doing the signals in Singapore at home. Jinwei is managing everything on the back end there. Kenneth is coming with his analysis, or Kenneth and Johnson coming with analysis later. Kim Hong at home. Robbie in Philippines. And we got people from Malaysia. We've got people from all around. So let's get started. What we do on this weekly live call is, in addition to the daily currency analysis, currency call analysis, in addition to the blogs, in addition to the signals, this call on a weekly basis on Mondays is to give you an update of what happened previously, or to review what happened in previous week, and also to project into what could happen in the week coming up, to review some trade signals that were fired out, to get some expert analysis on where we think the market is heading, and also just basically to help you set up your trading mindset, and also to project into how you should be looking into the market. Okay. Last week's video will be posted later today. This week's video will be posted 1 week later. So only if you're in the Traders Club, you get to join it live. If you're not in the Traders Club, you get to watch it on YouTube 1 week later. All right. My voice is cracking up right now, so I'll get who should start first? I'll get Jonathan to go ahead with a review of last week's happenings in the market. You can unmute yourself and get started.
Hi guys. So yeah, I'm going to take you through some summary of what has taken place in the last week. I think this time round, I will keep it quite short because the situation in the US has been constantly been quite uncertain, and the pandemic there has continued to worsen, as well as we can see the impact of this on certain numbers that were released in the last week. So let me just show you some charts. Okay, so yeah, this is some of the major pairs that we have that we follow closely. Okay, you can see that I'm on the daily chart. So each dotted line here, column, represents about start of the week. So I'm just going to take you through to show you that overall USD has weakened across the board. Okay, why? I will come into that in a short while. Okay, we look at pound. You see pound open the week slightly weakening and climb back up. We have the euro as well. Okay, being on the rise on the last week. We have we have Australian dollar. Okay, you can see it is actually, on the day-to-day continuingly to climb, and even one whole zone to zone. We have the Kiwi as well, increasing. US yen coming down, and of course lastly the CAD. This is a 1 hour chart. Okay, also coming down. Why 1 hour later? We are looking at this pair in further detail. Okay, so let me take you to our blog. Right, so this is the block analysis for 10th of April. You can see it, right? Yep. Okay, so this is the why 10th of April, because this is the day that actually more important data was released and actually caused some movement in the market. So we focus on actually the unemployment claims, okay, that was released. It was worse than expected. Okay, if I take you to Forex Factory, you can see here April 9th. Okay, our blog post 10th of April because we write it one day later. You can see at 8:30 there were some figures that were being released. Okay, we have the unemployment claims from the US. Okay, previously was revised to a bigger number. Okay, forecast was actually at 5,000. They were expecting a slightly bit of improvement there. But what happened is actually the actual number that was released was in fact worse than the expected. Hence, it caused the USD to further weaken. Okay, if you realize at 8:30, apart from US numbers, okay, Canadian also released their employment figures. And you can see that the numbers have also not performed well at all. Okay, and hence let me take you back to the Canadian chart, which I wanted to show you. Okay, yeah, so we come back here. You can see that despite the Canadian news being quite poor, okay, the US numbers still overall superseded market sentiment, and you can see the red line here at the point of news release. US CAD didn't even make an upward move first. It immediately shot straight down by about, I think it was about 100 pips there. Yeah, it's about 100 pips there. So based on what Jean has always mentioned, that please do not anticipate market movement and price based on just purely what you see on the Forex Factory, on the news, on news releases, then jump into a trade immediately. Okay, take a while to look at the charts, what is happening, and come to try to make some conclusion from what you see. Although I would suggest that in this case, okay, a retail trader like yourself could be quite confused because you have two news being released at the same time. Both points to the same outcome of both currencies, both situation in both countries not doing as well. Okay, and you would actually expect, you ask yourself which is actually worse. So most of the time you may not know. Okay, sitting at home reading with the limited access we have to information, you may not be able to deduce, okay, which bad news or which good news has a heavier weightage. So one of the way that you can actually tell is first you wait and see what happens and let the price and chart actually tell you, because the sentiment that other traders and people are thinking. But then again, if you're not sure, okay, you may choose to stay out of currencies such as the US CAD at a point of time, because that may be too much information for you to absorb, okay, at that exact moment. Especially trading the news, your emotions are probably all over the place, and with the charts moving fast, and at the point, and you have to make a split-second decision, you may end up, losing money. Okay, and as you lose, your decisions will pile up. Wrong decisions will be made one after another, and eventually, you will not have a good trading session. So, yep, it comes with some experience. Maybe if you follow us in a longer term, yeah, we can point you to a general direction. So I just want to move on to highlight to you. We mentioned that USD has weakened across the board. Okay, but the best performing pair against the US dollar last week was actually the Aussie dollar. As you can see, every day is a white candle going up. Okay, it has went from one support level to another, move about 350 pips. So why is this so? We think that we have not heard much from the Central Bank of Australia. Okay, interest rate has maintained. Okay, there was no cuts, and there was not much stimulus packages being dished out. So that could probably be a sign of some form of stability or optimism that they are still adopting a wait-and-see approach, and they feel that it's not the right time to step in. So that could be the case of why Aussie has appreciated more, okay, in comparison to other pairs. It's a rather straightforward climb there. Yep, so I think that's all I have to wrap up the last week. Maybe I hand the time back to G.
All right. Thanks for that, John. So yeah, last week has been quite an interesting time. We're starting to see some impact or in terms of the employment numbers, especially in the US, where everyone hasn't been working, or everyone's been staying at home, right? Pretty much everyone in the world has been staying at home now. So we anticipate to see that the employment numbers across the global economies to be worse than expected. And I think it's always going to be worse than expected no matter what we expect, which is why we've seen quite significant moves in terms of the currency whenever employment number comes out. We were just talking about that in terms of the Aussie dollar as well, but I'm pretty sure Scott will touch on that later. I'll get Daniel to share with us some of the trade signals he fired out last week.
Okay, sure. Last week was not my proudest moment. I fired out 5 signals out, and there were 4. In fact, the pound yen actually hit the stop loss itself. So 1 was done well, and then 4 did badly. So let's review 2 of the trades, which is the US CAD. Okay.
So before you jump into that, Daniel,
yeah.
what made you feel that was one of the issues with last week? Which I mean, signals are never going to be 100%. I understand that. We all understand that. But
yeah,
what do you feel was one of the biggest difficulty from last week's signals?
Last week the movement was very slow. The whole week the movement was slow. Based on because of the oil, there were a lot of negotiations on off and stuff, and there was one or two not so good mistakes. I think that I was in a hurry. I mean there were signs based on the steps, but I was in a hurry to. It looks as if the momentum is going, so I gave a signal out. So I will explain a little bit here right now.
Okay,
I reviewed over the weekend on my signals itself.
So it's a bit market problem, and it's a bit of it's jumping in a bit early kind of
thing.
Very
early. Yes.
Okay.
Yep. Okay. So on 6th of April, the US CAD trade idea itself, there were no major news previously. The news coming out was BOC Business Outlook Survey, which usually I saw there was nothing much happening. Usually doesn't really impact so much itself. So the trend you can see, can't see, but it was actually within these two, within the resistance and the support line is ranging itself. So as it goes up, you can see that it actually bounced off the support. It seems to be after looking at this one, and it looks like it's bounced off. And while this didn't close at a 1 hour candle, it shoot up very fast. And I was looking at it, and the plan was that, okay, if I was articulated, this is like, it's already telling me is my buy momentum is there. You see the fast MACD, and it shoots up. I was saying that, okay, after this candle, if it goes higher, something like here, and I will just give a enter itself. But in this case, it's too fast because it went up about 13 bips itself, and then it drops back down quickly within the hour time frame itself. So not really a good signal.
Are you talking about the blue arrow there?
Yeah, the blue. Okay, this blue arrow is where the candle I signal a buy of the US CAD at this line at 1.4.
I'm looking at the chat. They can't see your cursor if you're pointing at anything. So
okay, you give me a minute.
Yeah.
Okay, let me put the laser pointer. How about the laser pointer? Okay, got it. So you can see this is the candle that I have been I sent a signal. It shoots all the way up very fast, and I saw the fast MACD goes in, thinking that it would be a bounce. So I sent a signal out at 1.4160 here, and it went up to about 13 bips itself before it fell. Within the hour, it drops really fast. So it was pretty incredible itself. So I reviewed my trade levels and I looking at it again. Yes, although it's within the range itself and it could be a bouncing, but I have to take note that there is a short-term downtrend and that downtrend here itself. Okay, that means Canadian dollar is strong, although here it's consolidating. But I have to be very, very careful. This is a 1 hour chart itself. So I think that what I should have done was to mostly, number one, the first more important is to wait for this candle to close for such a big movement itself, to candle to close to ensure that it's just not a sudden spike up and then it comes down. Okay, especially in the 1 hour chart itself. In this case, I was gone missed the hassle. Yeah, so this is one of the learnings I think I have here, especially coming to looking at all the news of the oil negotiation.
Okay? I think the point that you had, point number 2, where the short-term trend is down, I think that's the most valid point there, rather than anything else. You know, it's really a lot of times we try to enter trades, trying to force, thinking that we're trying to force the market to go higher, and that's what a lot of retail traders do. It's more looking at it, going, hey, it's going down. The short-term trend has been going down. Let me look for somewhere to sell, rather than thinking that, hey, I could be buying the bounce.
Yes.
So I think really try and keep it simple.
Yeah, exactly. Okay. So the next trade itself is, in fact, it's just the next day on the 7th. So most importantly, even though I have one bad trade, I have to keep every trade refresh myself. So I always look at each trade as it is special. So again, I saw, and this time it really broke carefully, strongly through the support of what was it, 1.4080, roughly there. Of course my zone is 87. So it broke down, and I was looking at this candle pretty strongly, and then that's why I indicated to sell at 1.4050, because it really broke very strongly here. And you can see, in fact, it's a downtrend. Okay, this time I got it right, downtrend. And then in this case also, you can see here I have this candle. I was both fast and slow MACD was actually already crossed, and it tells me that the sell momentum is very strong. So I decided to send a signal to sell. Next day, the news was on the 9th, 2 days later, on the CAT employment change, which is 2 days later, which I think, so this trade we still can still be entered itself. Okay, so let's see what happens. So overall, it actually went down continuously, keep going down itself. It's also at TP1. It's still within the Bollinger Band of the 15-minute chart, although I usually don't see, but 1 hour, you can see the 1 hour chart is already out strongly. So I decided to have a look at the 15-minute chart, and you can see it's within the Bollinger Band. So I decided to continue to hold itself, and then it move up and down, and then hits to TP2. Okay, TP2, I also think that we can still hold because it's still within the Bollinger Band. But I'm looking at this after this chart. So in the 15 minutes, you see this, after this TP2, this candle, it shoots out of TP2. So at this point, I would have, I actually exited out here because it shoots out quite nicely out of the Bollinger Band. So thinking that it will go back in. So I actually exited out in after TP2 here itself. This is one of the learnings. You can see that although I say TP1, TP2, TP3, you could still, if you're still monitoring and any chance of, well, there's a signal to tell you to get out, it's a good chance to get out.
All right, then so I see a lot of puzzled faces there. Just to let you all know that the header on top, CAD Yen, is wrong. It's not a CAD Yen trade, it's a US CAD trade. The date is wrong as well. So we're still talking about the US CAD on the 15-minute time frame rather than the CAD Yen.
Okay, so apologies on this one. I didn't change the date. Okay, so the title, and then it went down and it goes up and then it hits in this TP3 again. You can see a long bearish candle at TP3 itself. This kind of candle again out so strongly out of the thing, and it hits the third take profit. I would really suggest you get out as well. Yeah, so that's all for me.
Okay, thanks for that. Is there any other questions that we might have coming that anybody would like to ask Daniel in terms of his signals, not just the ones that he's been talking about if you follow any of the other signals or you got any other questions about any other trades that he's been firing out, you can put it in the chat or you can unmute yourself and ask the question. Going once, going twice. No questions. This is going to be quite a short and sharp session. All right. So it has been quite a, I wouldn't say quiet week last week. I would say that to be firing out the trade signals, it was a bit more challenging because markets have been sitting quite in a range before shooting higher or before shooting lower. A lot of the movements were triggered by news, right? By big economic news release or by waiting for news such as the oil and also the employment numbers. So sometimes those trade signals, while we fire out, it's really, we want to try and move towards also identifying potential trade movements for you rather than just specific trades. So you can also be looking out for potential movements. I think one of the nice additions to these trade signals, what Daniel has been doing in the Traders Club, in the LCMS Traders Club on Facebook, is that he's also been adding trades that he's watching, all right? Potential trade ideas, putting up, going, hey, what do you guys think? This is something that might lead to a trade signal. So I think that's a very good move. And if you're in the Traders Club, comment in there, share your ideas, and then that might also build your own trading experience as well, right? I know a whole bunch of you in here have benefited greatly from the trading signals as well. Okay, so hopping all the way over to Perth in Australia, Scott, if you would like to unmute yourself.
Thank you again, Jin, for having me on. Hello, everyone.
Hello, hello.
How's that? Is that better?
Yeah, good.
Yeah,
Okay.
hi.
Hey, everyone. All right, so what I just want to touch upon first is if you just watched the previous gentleman just then, Daniel, how refreshing it is to see an individual identify when something didn't go to plan. Because I know a lot of traders that they really hide away from when things don't go right, and it never will go 100% right. So you have to accept that, be transparent, hold yourself accountable. And that was, everyone needs to learn from that because it's really tough right now. I know a lot of people that are struggling to make profits. So this year's been profitable if you've been following the signals. So you just got to take a little bit of loss sometimes. Even a casino loses money. So you just got to remember that. All right. What I'll touch upon first, guys, the Aussie dollar was traded for me last week. I'll briefly touch upon that, and then I'll go into gold, and if there's time, maybe copper. I don't know your thoughts on that, Jin.
I love copper. I love copper as a good indicative instrument, but I don't trade it actively.
No, me either. All right, so guys, I just want to briefly touch upon the Aussie dollar. So the Aussie dollar is actually, I've noticed, has been a bit of a risk sentiment indicator. And last week, if you watch the S&P 500, it actually did rally a little bit. It doesn't really make sense. Obviously, the US is pouring a lot of money into, the economy. They're just printing money, and they're under duress. And what I was watching was how this was behaving, that the Aussie dollar above 62 cents. And this candle right here was very interesting to me. I just want to discuss this. I only made about 40 pips or so because I was unsettled because of the markets and how it's just erratic they've been. But I like this. It was holding above 62 cents. It went down, retest. Again, I didn't actually get this. I wanted to get it. I missed it. But then I continued to watch, and then it came down, it bounced, and then I got it, not even at the high of this candle here. But again, it's sort of, you look at it and go, wow, I should have held, and it's frustrating. But at the same time, you sort of have to look at the state of the markets right now, and they're very jittery. But it looks like how the Aussie dollar ended last week, the risk sentiment is sort of risk on a little bit, which means there's some positivity and optimism in the market, but it's going to be interesting to see how tomorrow plays out. Obviously, today is very uneventful. We have, bank holiday and everything with Easter. I'll just quickly bring the S&P 500 up. So as you can see, I've got the 4-hour time frame, so you can see it's run up a little bit. I actually bought this last week, very small position, and I got out with a small amount, and then it crashed. I'm like, wow. So that freaked me out because it looked like things were sort of, the market was buying a lot of what was happening. They're even talking about the US government buying equities, which it's very artificially inflated in my opinion, but you got to sort of go with what the market gives you. And it's unsettling at times because it doesn't make any economical, rational sense, but it's again rallying. So I actually might look at buying the Aussie dollar again this week. But what I will say is I'll reference to gold as well. This will be an indicator to me about which way to go. So if this eases off, then, we might say, the risk is on because uncertainty drives gold. Recently it has, but, the equities, if the equities violently sell off for some reason, gold will as well. That's what happened last time because people were just absolutely panic selling. So to me, it's going to be interesting for gold. I, would like to see, if it does move higher, I'd like to see a nice candle on the daily because there's a lot of data and a lot of conviction in a daily bullish candle. But if it just keeps, doing this but then it's very news orientated because you might have someone say like, oh, New York had 100 cases last night, and that could really, drive the equities markets, and it could ease gold off a little bit. But it's just something to pay attention to with gold. And
if I were to put you on the spot, would you say it would be going higher or lower?
Right now,
yeah,
probably higher. Probably higher. But
okay.
I reckon, Jin, it's going to test 1700, I think, but then it's going to come back down. It's because there's going to be a lot of profit taking. If it does push higher, like $10 higher, we have to see profit taking because people are still very unsettled. We've got you got to think about the investors involved here, the traders involved. They're probably taking a hit if they're self-managed, retirement accounts, or if they've got retirement accounts and stocks. They're like, well, we got to make money somehow. You can't make money with interest rates with banks. So a lot of people, might be trading gold, like retirees might be trading gold because it's been rallying high. So to me, if I'm like, I need some money, I'd be like, you'd think there could be some take profiting, occurring in the near future, which is fine if you've got a long-term position on gold. But for me, will manage trades during the week, and I'm just impatient. I mean, holding gold long-term is probably good. It might go to 2000. You see a few people talking about that institutional-wise going to 2000, but you got to be patient. And there's going to be big whipsaws, and it's, some people can absorb that. They're fine with it. But for me, just with my personality, my trading style is a little more, day to day. I might hold a position for a week, maybe. Usually less though.
Did you watch my gold analysis on Thursday last week?
I missed the Thursday. I was frustrated. I should have watched it.
It has been uploaded.
Okay.
Yeah. So just a quick, I'll jump in while we were talking about gold. We did some analysis on gold last week on Thursday. They actually did drop the lines, and I was actually calling out for it to hit 1700 before retracing back down again.
Yeah.
We've always been saying this for the past couple of weeks that we could see some upside, but probably going to be a bit limited before coming back down again.
Yeah, I agree. All right. Okay. One more chart, everyone. I just want to bring up copper. This is just an interesting idea. I personally have not traded copper. I follow quite a lot of people on Twitter, some professionals as well, more for just to see what the sentiment is in the market. And I noticed someone mentioned this and they had the chart up, and I just thought I'd broadcast this as well for everyone who, you know, if you've got a large account, you could tentatively put a position here. It might be a breakout. Copper is needed in ventilators. And
Yep.
as you can see here, just the spot price. The chart as well. I mean, this is the 1 hour. Let's bring up the daily. What I would say
we can't see your copper chart at the moment. We're still looking at gold.
Pardon me, Jim. I'll just bring this. Oh, share.
You have to share the other screen again.
There we go. I think this is it. All right.
There we go.
How was that?
That's
okay.
Awesome.
Wow. So I've just brought up the daily chart. Okay, look, honestly, it's not like a great entry because this was the consolidation. Although I don't really, that candle right there, how it's so wicky, is a bit concerning. I probably wouldn't have taken it on that because that normally indicates a rejection when a candle wicks like that. But it has definitely broken out. And if this candle closes like this today, it's going to be quite interesting to me. And it's quite a large candle considering we're on a public holiday. So people are obviously interested in this. But I just thought I'd raise it with the viewers and everyone. And it's just something, you know, just out of left field a little bit that I might, you know, entertain to trade. But I'm not in a position on this currently.
So copper, in addition to that, right, copper is also correlates with the Aussie quite well sometimes. So that's something to pay attention to because as we see prices in copper increase, it probably needs to increase quite significantly before we see a possible move in the Aussie as well. But, you know, while I'm telling you that, I also want to again highlight that although there's a correlation, don't expect to see copper price increase, jump over to the Aussie and start buying crazily, right? It's not always going to be that direct correlation. You know, it might be delayed. It might need significant moves before you see the similar move in the Aussie as well. So something to be mindful of, but not to jump in too quickly.
I agree. And that's my analysis, everyone, as well. Thanks, guys.
Awesome. So thanks, Scott. So at this point, I want to wait, Tommy has a question. Hi, Scott, on a scale of 1 to 10, what is Aussie economy at this moment?
Okay, look, honestly, so 10 is really good. I'm assuming we'll do that. Okay. Probably, well, before it was 6, honestly. So 3, but it's hard to tell. Like at 3 at best, honestly. It's people don't save a lot of money here. You know, they just don't. So there's 3 is, yeah. But the US is also not great. So it's more, yeah. 3 is my honest answer.
I'll pick on that point that you were saying that people don't spend a lot of money or don't send a lot of money.
Save a lot of money. Sorry, Jin.
Okay.
Yeah. So they're very dependent, and there's a lot of casualization of the workforce, and a lot of these individuals won't really be getting much government support. So the economic activity and spending is going to be so limited. I mean, it's just, it's. I'd say 3 out of 10.
They're limiting foreign investments as well. A bit of protectionism going on, limiting foreign investment.
Yes, so this is going to really slow things down for Australia, unfortunately, very much so.
All right.
So I am bearish on the Aussie dollar long term. That I need to say, but shorter term right now, it could go higher. So, but I would quickly turn if it broke down, to be honest.
Awesome. We were just sharing just then at the 11 o'clock call that I'm looking for it to break the support levels before possible significant downward moves as well.
Yep. That's right.
Anything else? Any other questions? Anyone has a chart they want to share and for us to pick through if you've got any questions or any trades that you want for us to look through. What I'm trying to do is, while we have Jonathan, we have Daniel, we have Jin, we have Kenneth here as coaches. I'm trying to get Scott in as well to join the team as a coach. where we start making sure getting you all accountable for your trades. So we will start being accountability coaches, watching every trade that you do, watching as much as we can, right? Making sure that you're not just answering to yourself for your trades. I feel that whenever you trade and you have someone to answer to, you're going to trade a lot better, because you're not going to enter trades on a whim. You're not going to be too emotional with a trade. Or if you become too emotional with a trade, there is someone there who is going to reach out to you quite quickly to get you back on track, using Roy still on, using Roy's term, to prevent you from tilting so you don't empty your account overnight. Someone there to really watch you and make sure that you stay on track, keep to the strategy, and trade consistently. Because I always say that a consistent approach to your trading is going to give you that consistent profit, right? If you enter on a random basis, your profit or losses is going to be random. Some days you make, some days you lose. Right? Any other questions? You all happy? Let's put Kenneth on the spot. Kenneth, anything to share with us? You can unmute yourself a bit.
Yep, currently everything's all okay.
How is it being stuck at home? It looks like you're in Japan.
Yep, I think it's quite boring and not much things that can be done as well. So the only thing that I can do is go and cut some hair and go and pack some food right now.
All right. So if you're looking for a managed account, what we've been doing a managed accounts as well, reach out to Kenneth as well. Then we can get you sorted with something there. Okay. So in the meantime, trade safe. Don't oversize. Markets are very volatile. Even if you trade on a smaller lot size, even if you trade a bit more conservatively, as what Scott mentioned quite early on just then, was a lot of people are struggling to make a profit. So if you are making a profit, don't overextend yourself. Be reasonable. Take a reasonable profit. Get in, get out. Live to trade the next day. All right. So I'll catch you all again next week. Thank you all. See you. Bye.